Okay, so you would use the FLD based on the high price or the low price to make trading decisions. I'm not going to dwell too much on that because the principles apply no matter what price you have based your FLD upon. So we're going to concentrate on the FLD based upon the median price. As a matter of interest, FLD is based upon the low and the high price used for trading decisions. We do not add that +1 in calculating how many bars to displace. So you'll notice that those FLDs are displaced 1 bar less to the right than the FLD based upon the median. But those are subtleties that needn't really bother you. All right, so that's how an FLD is calculated. That's what it is. That's all it is. Why did Hurst call it future lines of demarcation? Well, because he noticed that when you plot an FLD on a chart, as we have done here, using a completely idealized price movement, then he noticed that there's some very significant conclusions that can be drawn about where price crosses the FLD and various other things. Let me turn on my whiteboard. If I can screenshot whiteboard, there we go, pen. Okay, now the first thing that Hurst pointed out about the way in which price and FLDs interact is that where price crosses an FLD, such as is happening over here, then you can generate a projection from the previous peak, which is here, down through the intersection and continue at the same angle and the same distance, and you reach a target. So when price crosses an FLD, as has happened over there, then you can generate a projection target for the next trough. Or, in this case, here, price is crossing the FLD, you can generate a projection for the next peak. Okay? That's not a conjuring trick. It's a purely mathematical statement about how cycles interact with themselves when displaced by half a wavelength. Okay, there's no conjuring trick. It's not a great aha moment. It's purely and simply a mathematical a feature, if you like, of an FLD. All right. The other thing that Hurst noticed is that when an FLD forms a peak, such as happens here, price often forms a trough. Not often, price always forms a trough, according to the mathematics of FLDs. When the FLD forms a trough, price forms a peak. Okay? So that's what Hurst pointed out about the mathematics of FLDs. So let me clear this whiteboard. How do we then use FLDs? Well, we use FLDs basically in 3 ways as a result of the mathematical properties. The first thing is when price crosses an FLD, we receive confirmation, what I like to call confirmation or evidence of a cyclic nature, that a peak of the cycle in question, in other words, the cycle upon which this FLD is based, has been formed by the price. So when price here crosses this FLD, let's call this the FLD of the 40-day cycle. When price crosses the FLD in a downwards direction, we confirm that the highest price within the past half a cycle's wavelength is in fact a peak of the 40-day cycle. So we confirm that peak. Similarly, when price crosses above the FLD, as it does over there, then we confirm, we have evidence of a cyclic nature that this trough has in fact been formed by the price. And same thing over here. Okay, that confirms that peak. All right, that's the first thing that we do. We use FLDs to confirm analysis decisions. The formation of a peak or a trough is confirmed by price crossing an FLD. All right, what's the second thing that we do? The second thing that we do is we generate a projection. This in Sentient Trader is called a normal FLD projection, and when price crosses an FLD, it generates a normal FLD projection by taking this distance from the peak, which has just been confirmed, down to the crossing point and beyond an equal distance, and it says this is the target area for the next trough. Similarly, when price crosses above it, it generates a projection through there over here to that peak. All right. The third thing that we use FLDs for is determining how FLDs are going to influence the future price movement. If we're sitting on this bar over here and we see that FLD has formed a peak over there, then we already know that we expect the trough to form at this point, because troughs in prices line up with peaks in FLDs. So now at this point we would have this FLD information available to us, because at this point our FLD would go as far as here. Okay, so we would see that peak very clearly in the FLD. We would say, there's a peak in the FLD on this particular bar, therefore we expect the trough to happen on that bar. Those are the three ways in which we use FLDs. All right. I have been speaking, obviously, about idealized FLDs. Things get a lot more complicated when you combine cycles, and you include random noise, which is what happens in the market. So let's have a look and see how FLDs are used in practice, and let's display a few FLDs onto this chart of the S&P 500. Let me just zoom out and let's talk a few real sort of big picture things, just to put you in the picture, if you like. This is a chart that I've spoken about in the last few Traders Chats. It's a chart that includes an unusual 6-year cycle, which is not Hurst. I should warn you, Hurst spoiler warning. The 6-year cycle is not part of Hurst's nominal model, but I believe there's a good deal of evidence that there is a 6-year cycle in the market, and this is an analysis that I've been following for a while that includes that 6-year cycle. And so this is the state of the analysis. There was a 6-year trough here in March of 2009, and the most recent 18-month trough in is that July? I think July 2010, and so on as we get into more and more detail over here. And so it positions a 20-week trough here on the 16th of March 2011. That was just after the Japanese tsunami earthquakes, and the market formed a trough over there, which I believe is a straddled 40-week trough. At any rate, the current analysis says that there is a 20-week trough which occurred here on the 9th of August, which I know is debatable, and I'm sure many people have things to say about that. It's possible that trough hasn't been formed yet, but the current analysis is stating that. If we have time later, it'll be interesting to discuss whether this trough really was formed at that point. Now, let's display some FLDs. I mentioned that you can generate a different FLD for every single cycle. So let's do that. I'll turn our Sentient Trader chart into what Alain, I think he once called it kitchen sink or something, which is a chart when you have you have so many lines on it you can't see anything anymore. So I've turned on every single FLD. As you can see, as soon as you start looking at a whole lot of FLDs, things get very, very messy. So let's turn those off, and let's concentrate on just one at a time, shall we? Here is the 18-month FLD, and if I change this chart to a weekly chart, which makes it a little more easier to look at, sort of bigger pictures, then you will see, there we go. This yellow line is the 18-month FLD. It is the median price displaced to the right by half the 18-month current wavelength. The current wavelength of the 18-month cycle is 17.6 months, as you can see at the bottom of the chart, bottom right of the chart there. And you will notice that over here, let me turn on my whiteboard again. Over here, we have a very exciting moment, which is price has crossed the FLD. Okay. As you can see. Now I should suggest something before I do that, and that is that we're looking at candlestick charts. It's a much better idea when you're considering FLDs to look at the median chart, because we're interested in median price crossing the FLD, of course. So there we go. If I can turn on my whiteboard again. Right, so here of course we have the famous price interacting with FLD moment. Okay, so what can we, and I need to zoom out, I'll turn the whiteboard off again, not zoom out, I'm just going to drag this, chart like that. Okay. All right, so I mentioned that there are three pieces of information that we use when price crosses the FLD. So let's have a look at them. Here is the crossing point. Price has crossed the FLD at that point over there. The first thing that we do is we know that as price crosses that, that confirms that the trough in the previous half a cycle, the highest point in the previous half a cycle, is the peak. So therefore, we can say with some conviction that this point over here is a peak of the 18-month cycle. Okay, looking at the 18-month FLD, it is giving us evidence of the 18-month cycle. So this here is a peak of the 18-month cycle. Fantastic. The next thing we can do is we can generate a target, a price target. Now, interestingly, Hurst said that targets generated by FLDs are more accurate in terms of price and less accurate in terms of time. The easiest thing to do is to simply generate a target in terms of price and time by drawing a line through there, continuing an equal distance in the other direction, and saying our target is therefore about over here. Okay? Hurst said that you should use FLD lines to generate price level targets. In terms of the time it takes to reach the target, the FLD is not a very accurate measure. I certainly found when developing the software that that is true. Sentient Trader does use the time target as a very rough idea, but it uses more accurate ways of determining the time, which have to do with phasing. Anyway, then the third conclusion that we can draw at this point is that where the FLD peaks in the future, which is over here, where that FLD peaks is where we can expect there to be a trough of the 18-month cycle. So those pieces of information, if we were using FLD analysis only, tell us that we expect price to fall down to this level over here, which is round about the 1050 level. And we are expecting that trough to occur round about the middle of January next year. Okay? So that's really interesting information that we have gathered and gleaned from our FLD. So now we can do that with every single FLD, and as you can imagine, that's quite a lot of work, which is one of the reasons why I developed Sentient Trader, because doing this manually, on a manual basis, is quite a lot of work. So now I rely on Sentient Trader doing it for me, and I simply go to the View menu, show cyclic analysis panel, and if I click on the projections button, you will see I have a list here of current projections. And you'll see listed here the 17.6 month normal FLD projection, that's the price crossing a median FLD line, was created on the 1st of August, projecting a price fall of 152 points.